Good morning. Happy Friday, everybody. Hopefully you're all doing well. Hopefully you're all feeling better than I am. I was explaining to Max that I had an epic cheat day on my diet yesterday. I'd been celebrating a new goal or new weight loss metric that I'd hit or milestone in my cut for the summer. And then I went ahead and just ruined all of it yesterday by myself. So yeah, it's part of the game, right? Max, how are you doing today?
I'm very well, mate. A little bit tired, boring day so far, but yeah, it's going to be.
It's never boring in crypto land. We could always talk about BlackRock and their ETF.
Wow,
I know
so
that's
exciting,
right? I mean, how are we going to use that to trade?
When did that come out? This morning?
I think it came out yesterday.
Yeah,
it came out yesterday during the move.
Okay,
but I mean, it's just funny that comes out and we're coming into a huge technical target, so it kind of cracks me up. But yeah, so where we landed, guys, was the Q2 pivot, basically the Q2, right? So this is a pretty high statistical target, and if we use only Bybit data, I'm pretty sure it's right around 72 or 73%. But if you were to go back on the BLX and use these, you'll actually find that it's closer to 80% that these get hit within the session, meaning that, this 24,713 level that was given. One, it was also that weekly swing fail. We'll talk about that. Again, remember when we were going to the upside, this is ages ago. We were talking about this level being the one to break and how it was going to be such an important level when you go back in time here to trade off of. And you can see it absolutely was very well respected. And once cleared, off it goes, right? So lots there. But, the technicality was that as long as we're still in the Q2 session, ending in the end of June, we were looking for a sign of reversion to the average of the prior session, which would have been Q1. This data is what gives us the Q2 data, I guess right here is what I should be saying. So that is here for anybody that's wondering. You have your Q3 high, of course, which is the old range high, just from a structural standpoint. I know I'm on the 2 hour here, which is I was doing some back testing for the group with that Leviathan open interest indicator, looking at it and seeing if there's any way to pair it with another tool in order to make it a little more reliable with less drawdown on setups. So just kind of tooling around with that. That's why you see all these horizontal lines right here that are now blacked out. And I left one up right here. But the group will get that information once it's finished. I'm hoping to have it done this weekend. So, yeah, I mean, this is a mean reversion target. The question becomes, should we consider the bounce over? If we look at CME, which is very, very important, obviously the futures market for Bitcoin, also running smack dead into its Q2 right here at 24,895, about $170 premium, I guess, is the way we could word that in comparison to the spot price or futures price on Bybit, et cetera, et cetera. So you can see if we lose this Q2, you've got some pretty big candles here that we would expect to get filled in. And realistically, I'd just be looking for a gap fill. I know that's not the most popular thing. There's a lot of people that are probably eyeballing this level here, and it is boxed off for a reason. I believe it's your local gold pocket. There's a lot to say that this is an important box as well, between 22,951 and 22,377. A couple of NPOCs there, old 6-month key level. It was really good support and resistance for us here at 22,407, March NPOC, et cetera, right? So while important, if we were to take a look at this as a whole, though, and just merge all these ranges, it really, I think this is what we covered last time. We would really start to look at this and say that this is probably, just a giant range rotation. And we would now be looking at what our overall structure could be for Bitcoin. And it puts us all the way back down in this 20K region, which lines up really, really nicely with our gap. Okay, so the question becomes, with this specific setup. Where do we go from here? When do we know if the bounce is more than just a bounce, right? From a technical standpoint, we're going to get into that using the volume profile. Show you guys the old range daddy skills from back in the day, first of its kind. Now I think everyone does it, which is good, and people should be utilizing these tools. But very simply put, these are the levels we were kind of, really, really hammering home for quite some time, all the way back from right here in May 12th. We had this box, and what this box was, if you guys recall, which I know you all do because you guys all have fantastic memories, and you would never, ever, ever discard a high time frame analysis that I've given you, because I'm going to come right back to it and make you look at it again. You've got the 1-to-1 here, right? So you have your 1-to-1 at 25,896.50, and then you had a naked monthly pivot from April. For those that can recall, you'll have to excuse me that I've got the quarterlies up at 69 pivots back, because I just wanted to see all the pivots and count them up before I gave the stat I gave this morning, because I wanted to make sure it was still accurate. But you can see right here, 25.7, 24.50. We had not tapped this monthly pivot, and so that was one that went untapped. And we've come back and filled that in, and now it's serving as support and resistance. So essentially what I've done is I've established my high time frame levels, my boxes, so to speak. We can probably get rid of this 60-day pivot right here. And, the quarterly pivot is here, but you could also label it, the weekly swing fill at 24.7. It's really an interchangeable level. It doesn't matter as long as you know what's there. Level to level, so go down to the hourly, and you can see that you've bounced from one zone back to the next zone. So when I give boxes, and we give them fairly liberally on this channel and in the group, we place them there for a reason. So if you're not into trading this type of price action, you know where you're supposed to be looking for trades. You're looking for trades right here, here, or right here, right? If we're just looking at this section of price, these are the only places that matter on the chart. And we're really not doing anything inside of here or right here, right? So keep that in mind. That's how you should have been looking at price, in my opinion. So you've got a move down, we've got to move back up, and we could be looking back into some kind of a pullback on this. I think Max had the right idea. We were chatting shit in the DMs, and he was talking about maybe a gold pocket, and so that would put you somewhere like right here, right? Now, where do we begin to think that this is more than just a bounce, and that maybe we are looking for a larger move, and we could be looking for that rotation back to, maybe a new attempt at a local high here above 28.5. I think that the yearly pivot and this, June low right here, or April low, I believe is what it is actually. Yeah, I think it's the April low. Let's take a look. Yeah, it is the April low. You'll have to excuse me. Is still the area to be kind of looking at, right? I don't know why that's there, but, and the reason it is, and we'll move this box for just a second, is because if by the end of June we recover, 26,925 and the yearly pivot, this little blue box, this would look like a pretty decent swing fail and a hold of support. And I would expect to rotate back up and backfill this monthly candle all the way to 29,237 personally. So that's the bullish case. So right away, just looking at market structure, looking at high time frame candles, we say, where do we want to close at? Well, like I said the other day, it's really not bullish that you've taken this low. You did hold it. Now you've taken the prior month low, the May low, and maybe you close back above the May low, inside of this April pivot. So if you wanted to get rid of this, April pivot, you certainly could. I think that's a valid thing to do. You could just mark off your next low, and we'll do that real quick here, right? You could just start marking your lows. I always use white to mark my lows and highs, just so you guys know. I think everybody's kind of figured that out if they know my color scheme. We can get rid of the April pivot now, and we can probably get rid of this box. And now we'll go to the daily and see, does this, yeah, this gives me a great level to work off of, right? So we have two monthly lows that we're really realistically working off of right here and here. And the first step is going to be recovering the May low. And if you recover the May low, I would expect an attempt into the April low. And we go back out to the monthly. Again, just kind of hammer home the high time frame levels usually dictate what we're looking for in terms of breakers. And you can see that you've got your 24/7 level here, which is really, really clean. So one would say, just looking at the monthly chart, you've got several highs right here. Even if you were just looking for levels to work off of, you could have just said that this whole area, based on prior resistance, because I can see the wicks, is my support. And it's a really big support. It's like $500, right? So how did we know to look for 24/7? That's where that pivot comes in, the quarter two. If you guys recall, we just talked about it. That's how you would have said, okay, 24/7 is a high statistical target. I would expect that level to probably get tapped. And we didn't really have anything in the order flow or in price action to say that it wouldn't. So now that it is tapped, what do we need to see? Well, 25,789 is the beginning. You claim that May low, we start to look up towards the 12M1 and the April low. And if this happens by the end of June, things are pretty, I would say, bullish at that point. Closing June back above this level would look fairly good. You would have some pretty large wicks into key support. The mean reversion would be done. And then you would be looking to see if this doesn't push through the quarter two open into that monthly backfill, right? So that's the bullish case. My personal bias is probably lower still. If you want to know the truth, I do think that we likely come down over time, over the next coming weeks, but I've been wrong before. So we take the trades that are available and we do the analysis, and whatever the analysis dictates is what we go with. So as of right now, no sign of strength on this move. Definitely bounce worth playing. The bounce setup, I'm going to leave to Max. It was a really simple one. We talked about it in the group live. I believe I can come over to here and take a better look at it. And you can just see swing fail the low. I'll let him get into that. But, Max had put it bluntly, and I did as well, that, we'd expect to see that formal tap of that 24,713 level, which the front run on it, if you want to refer to it as one, was only $31. So I don't really count that as a front run. But what I will say is, you had a clear setup, the swing fail, et cetera, et cetera. So you had opportunities to get long here. It wasn't exactly rocket science at a key support. So should have given everyone a good entry. You have now a good stop loss, and you've already hit your first major target, which, essentially for all intents and purposes wasn't just the April pivot, but it would be the May low that we just talked about, right? And I think if you were going off the May low, it did front run it a little bit. So that April pivot would have been a little bit more preferred, or the gold pocket you just saw me pulling elsewhere. So let's get into the low time frames here now and talk shop on. We think that the April low and the 12M1 are what we need to recover, right? So let's marry this box up a little bit. And I think that would be quite accurate if we just went box to box here. We'd need to see this box reclaimed. If we look at it on the daily, what does that do for us on a daily? It really does get us back above like these last local daily highs, and in a position to maybe actually make a new daily high and change market structure locally. But until that happens, we are still in a downtrend. What does the volume profile say? I know we promised some volume profiles. Let's start on the high time frames as we're coming into some key times, because we're going to be ending the quarter. The first 6 months of price, we're going to be in a 2 month and of course a monthly as always. So we've got our quarterly range up, and straight away what we see is that the value area low starts to line up really nicely with the 12M1 here. So it's a discrepancy of about $124, $130, not that big of a deal. Let's look at our 60-day now that we've looked at our 3 month. Where's our point of control? Just above the 12M1 inside this blue box. So we now know that. Let's get rid of this box actually. And let's get rid of the April low. Let's just get rid of all that altogether. And you can see the 12M1 right here. I'm going to leave it up for now. No, I'll get rid of it too. Fuck it. We'll just go blank here. So this will be a good illustration. I was trying to explain this in the classroom, so it'd be good for everyone at home too. And now we look at our monthly. And so we notice on the monthly that we've got the value area high here. We've got the point of control of the 60-day, and then we have the value area low of our quarterly. So just straight away looking at, the one standard deviation across multiple sessions, right? If we were to view that, we'd just say this zone right here from the quarterly val up to the 60-day point of control with the monthly value area high right here all comes in this box, right? And so let's get rid of all these levels one more time. And this would be your SR flip based on just using time as your guide. Remember, I've always said it, you have to have consistency in your analysis. Everything can't be a variable that's, subject to subjectiveness for much, for a really terrible way to put it. But subjectiveness is good in a sense because it does separate, traders from one another. However, you should always have a constant inside of your analysis. And so what you'll notice is this is a pretty good SR level. We do have some wicks below it, kind of giving us the hint that if we don't start making higher highs, we might actually flip this level. And then ultimately we do right here. You get the SR flip down to the big support we've been looking for. And now we need to see this level essentially reclaimed. And that is going to be the value area low of your quarterly range. It's going to be the value area high of the June range. And then you have a 60-day range, which is something I like to calculate, that 2-month bi-monthly. That is your point of control all coming in there. And that is, why it's such an important area to me still. And if we were to go to the high time frame levels, which you guys know we love those, it is also your 12M1, which actually is no longer untapped. I need to change that here. And so, yeah, that yearly pivot area with the April low, if you guys recall, the one we were just talking about, just hammering home, boom, lines up nicely with what our volume profile says as well. So if I was looking for a trade and I already took it, I take profits definitely had to be had, because we've come up into this key low, or the old April pivot in that 1-to-1 box, however you want to box it off. I don't really care. This is that key area to get back above. If you get above it, expect a move into this region. And, that's really it. And if we look at, let's actually do this. Let's do this with the volume profiles, and I'll kind of show you guys something real quick. And then I'm going to turn it over to Max, because you guys don't want to hear me droning on and on about this too much, but this is good educational info, I think, for the peanut gallery, right? So value area low is here. We don't need the quarterly for this. We'll start to look at our bi-monthly. Where are we at on that? Boom. Bi-monthly value area low comes in where? At the key low, the May low, right? So we need to see the May low reclaimed here at 25,789. And if we look at the monthly, there you go. It's also your point of control for the month. So if we want to see a rotation on the monthly range, what do we have to see? We have to see the point of control reclaimed. If we want to see any kind of a move to the point of control of our bi-monthly range, we need to see the value area low reclaimed, which comes in at the monthly point of control. So if the monthly point of control is reclaimed, or the May low in this instance at 25,789, it also gets us back in position of the bi-monthly range, meaning that we would expect, one, a rotation of our monthly range right here, June. Okay, so we'd now expect June to get filled out. And that puts us squarely at the point of control of our bi-monthly range. So now you see how the range rotations get underway, and why sessions, tracking things on a time basis really can be very useful to realistically anyone in any trading style. If this isn't your bag, because it's a lot going on, but what you're trying to do is, when you're laying out your high time frame plan to yourself in your journal, is you just want to make sure that you understand what's going to happen. Now, do you need to reference these things over and over? No. Does it hurt to maybe do it once a day, right? When you open up your charts, start on the high time frame, see if anything's changed in that bias. Doesn't hurt, but just understand that, you need to see something that changes your opinion. And for us, or for me, my opinion changes above 25,789 on like a 4-hour closing basis, however you want to do it. This level just needs to get claimed as support. If it does, you can trade up to the next blue box, and volume profiles support it. Horizontal support it. And then we play the game of, do I want to short this level? Right? Otherwise, we look back down to support here. And if this support gives, we're still looking for that, 22, 23K level. And then realistically 20,000 for the gap fill and the overall point of control.
Did we just both disconnect?
It's a great question. I show that we're live.
It still says that we're live, but the timer is, I'm not sure. Not sure what just happened then.
We'll carry on. I'll check it on my phone while you're getting going.
Okie dokie. Let me get my screen up. This one. Yeah, so, really, really simple trading wins it, I guess. So we had this move down, and we know that when you have big drops in open interest, let me hide these. when you have big drops in open interest, typically it does mean the end of a move. And when you were getting them in this move, yes, you got on here. Just because you're getting one doesn't mean it has to continue. You then have to wait for a signal to take a trade. And then we had this second drop, and then we were kind of just dawdling around here with really large increasing open interest. And then it kind of plateaued for a little bit while we came down. And what this was effectively doing was, a load of people bought at the bottom. Let's just say for a load of people that were sat on the sidelines thought it was a good time to buy, or short, thinking it's going to go down more. Traders that got taken out, had the stop loss, hit, wanted to get back in. All these type of things can be the reason that we had this huge increase in open interest, and yet price didn't really go anywhere because obviously both sides of the markets are competing in order to push price in their favored direction. But anyway, what ended up occurring is you just simply came down and SFP'd the low. Now, it wasn't a big SFP. It wasn't the best SFP, but it was an SFP, and it was the only real good trade that you had the whole day yesterday. If we go and look at what occurred on the Binance Orderflow data, you can see that when you came down and took the low, now I can't show you the low, it doesn't have it highlighted here because for some reason my XO data is just non-existent for when the low occurred. But anyway, we move on, typical XO stuff, to be honest with you. You can see that when you took the low, normally I'm trying to look for a percentage drop in open interest would be like the perfect amount for me to warrant a reversal. But instead we only got 0.03%. And yet delta was really high, volume was really high. These are the things that you can look for and then effectively point to and say, okay, this is positions changing hands. When you've got huge negative delta and virtually flat open interest, on such an extreme scale with huge volume, huge negative delta in this case, and a load of trades, what that effectively means is that a load of longs were taken out of the market, created a load of selling, and then what happened is, when we say taken out of the market, they're effectively passed over to someone else. So someone was sat there, picked up all these longs, and then effectively pushed price up from there. So this is a really good example of positions changing hands. I really dislike trying to point out positions changing hands because it is difficult and you can't really 100% isolate it, to say, this is it. But this is a very good example of, position changing hands. The fact you had such negative delta and flat open interest. And then what occurred after is you had a load of shorts closing out with buying imbalances. This, for me, was the entry trigger. Shorts closing out with buying imbalances. You just had an SFP of, I think it was the Asia low, I can't recall, but just SFP'd the main low. Buying imbalances coming off it. Nice delta switch up, and it continued with increasing open interest as more buyers came in. You then came back. You didn't come back down to the gold pocket, really locally. I am on the 1 minute here. But you can see that even though you had the shorts trying to pile in, you can see here you got a negative 5 million delta on increasing open interest. What did price do? It then continued on with the move it wanted to make, reclaiming the VWAP. And then if you were still somewhat afraid of taking the trade, you can see that all of a sudden market structures changed. So not only throughout the day were you making effectively lower highs and lower lows, suddenly what you're doing is you're taking making higher highs, making higher lows, higher highs again, higher lows. All of these things were changing in the price action, all on increasing open interest. And what does increasing open interest mean? It means that longs are coming in as well as shorts. And if you're trending in one direction, it means that one side of the market is getting trapped. That side was clearly the shorts, and you just had many reasons to want to get into the long down here, after the low was initially taken. So if you didn't get back in here, this here was just really clean in order to get into a trade. So you had many options to do it, and then the move up after was just so sweet. Honestly, it really was. You got the initial thrust up, all on increasing open interest, and then what happened is you started to get drops in open interest towards the top. It then dawdled around a little bit, came down on decreasing open interest, which is good for the upside. But ultimately, on this second leg up, the open interest didn't increase with the trend, meaning that, it's a weaker move. So, a weaker move up. And where did you come into? Well, you came into the gold pocket. There it is. So you came into the gold pocket, and it was a weaker, last leg of the move. And that's currently our resistance. And I think that if anyone was there trading it, I was not at 1:30 in the morning. It was a very valid short, because you also had an SFP of the high that was made. So, weak last leg of the uptrend into the gold pocket, SFP of the high. You have your reasons to take a short here. Granted, it's not really done too much, but you could have certainly taken a scalp trade from that. Now, where we are right now, we are clearly consolidating in this little range. Now, I'm going to pop this on just for now, so you can kind of see everything is here. Okay, you've got the Asia highs here. You've got we'll just call it the day high and the day low, because we've not taken them since the Asia session. And in this box, okay, I'm going to just draw a box over it because it's a little bit cleaner. Let's go from here, please. Okay. In this box, we've also had very large increase in open interest. Not huge. It's about 4% from the low down here to where we are now. Could just double check that. Oh shit. Thank you. So shift click. And to where we are now. 3 and a bit percent. 4 is almost there. So 3 and a bit percent increase in open interest. So, when we're talking about $3 billion in total, using the this TradingView aggregated indicator, it's a considerable amount of money, and that's all come into the market here. Now, whichever way we go from this box, if we come below it and hold, it's going to be very bearish. If we're not SFPing the lows and we're living below it, it's going to be very bearish. And this area is really going to be resistance. Now, I am in a long, and I've put my stop loss here. But if I see that we don't SFP the lows, which would be a trade again, by the way, if we SFP the lows, it's another, you can take a trade on a second account, and why wouldn't you take that trade? But if we start to live below it and we're not SFPing it, we're bouncing our head along the top of it, there's a very good chance that we then see that cascade of selling take place, similar to what occurred. It was, I think it was a Tuesday. It was quite a far back, to be honest with you, but similar to, I think it was here actually. Was it here? Yeah. So when we got up here, I think it was this box. Yes, it was. So you can see if we draw a box here, granted this is on a smaller time frame, but it's a similar thing to try and illustrate what I'm trying to talk about. Here. So we draw a box here and drag it over. You can see that in this little box, we had a very large increase in open interest during this small consolidation. We made an attempt at the high. It failed. You didn't hold the top of it. You'd really draw your box like this, actually. You failed to, I think we're just taking the low there. So yeah, it's probably going to nuke at this point. Oh, it really has. Let me just have a look at that. Damn it, Magic. I should have just taken the, I should have closed my long. What are we getting here? A 0.5% decrease right now. Huge negative delta.
That's what your alert sounds like for a 0.5%. That's what I told you. I literally told you, I was like, well, hopefully you've taken some profits on that.
I did. I took many profits.
But yeah, no, I can't believe that's what your alarm sounds like for a 0.5% decrease in open interest, to be honest.
Oh, no. That was ATS.
Oh, okay. I was like, good God, man.
Yeah. I put the stop loss below this low. But yeah, no. The alarm's even more annoying for the 0.5% decrease. But yeah, so now we've dropped it and we've not lost this region. So this region is most likely going to be resistance at this point. So ignore pretty much all the analysis. We've not SFP'd it. We've nuked it. But now the question is, what is the delta doing? It's a very nice drop and a huge decrease in delta. Very awkward bounce from here, Magic. But after such a move and knowing that this resistance is here, I would be a little bit more on the patient side.
I mean, just from a structure standpoint, that's your previous week low, right in that range, right?
You were below it.
Yeah, you want to live above that. That also puts you back in the developing week range. But if you don't, kind of like you said, you don't recover that area, basically the box that you got up there, it's probably going to come down to the lows again.
Yeah, which won't look very good at all.
No, but if it recovers that box, I would anticipate that move up. You know, I think then you're probably looking for more of a formal test of like just past that May low, probably like 26K, give or take, and then we'll see what happens.
Well, yeah, it's basically gone over everything I wanted to talk about. But if I put this on, where is this at? Oh, it almost came down to the gold pocket magic.
Yeah.
Front ran the gold pocket and an untapped daily that we've got there.
Oh, yeah. That's good support. I can't believe you had your stop loss.
I know. Mate, I wanted to get in it and lock it in. I fucked it. I told you it was bad placement in the DMs.
Yeah, no, that was real bad placement. Fucking, you gotta be below at least the support, man. Doesn't matter. It was a winning trade regardless, I assume, because you said you took some profits on it. So it is like what it is. A teaching moment for yourself. How about that? But if you knew you did it before.
Oh, mate, I said I did it because I was expecting to get back in it, but I wasn't expecting the move to be that fast.
Oh, well, it's part of it, I suppose. You said you're done?
Fuck, what am I going to say? The main analysis that I was going to say is gone. But yeah, the area that I was going to go over next was going to be the gold pocket and the this region here. The reason that I had my stop loss where I did was I was trying to keep it away of
My bad.
here. I didn't want it anywhere near here, but I also wanted it here because I thought, I actually put it about here. My stop loss is in this region because I thought if we get down there, there's a very good chance that we're coming to test the gold pocket. I'll lock in a little bit more profits and then get into the trade again when it comes down. But that was a very fast move, so it's what it is. Yeah, who cares? Live to play another day.
Well, I'm going to go ahead and look at the DXY because I said we would. And then we'll talk shop on SPX, and it'll be good stuff. 33 minutes. Look at that. We're just going to chalk up 33 minutes to the DXY and SPX all at once because why not? Okie dokie. So you guys can see that I still have this meme triangle up. Not confirmed by any means, but, when we talked about price this last time, we were coming up and pushing into this zone. We'd said if we can't get back above here and we lose the April high, what are we expecting? We're expecting to see 102.21, which you can see is trying to act as some form of support. Very good support and resistance, both locally, but on the high time frames. This is a 12-month level that if we were to go back in time, because I know you guys love going back in time with me, this was the top of our range right here. So you can see we had a multi-year range. Bing, bong, boom, right? So closing back inside of this is not going to look great if we start closing high time frames down here. Okay, so that's all you're really looking at. So if we lose that, 102.21, I'm expecting to come all the way back to the local low, and then you have a flat bottom of support, and you can treat this however you want. You can treat this as a double top at that time, maybe a potential bounce, which gives us our meme triangle, right? Either way, not bullish. So what you want to see, if you want to see the dollar continue to climb, maybe you're in that camp because you're like, I didn't get to buy any Bitcoin at the lows. I don't care about my altcoins. I want them all to go to zero because I want to be able to buy as many as possible. Then you want this to hold that higher low, and you want to see this, right? You want that. And maybe we do get that because you are at support. So Bitcoin pulling back at resistance and the DXY bouncing currently at support. Who would have thought that could happen? So that's your DXY analysis. 102.21. That gets flipped into resistance. I would expect to see 100 flat. And then we play the game of bounce, or double top down. And I would just realistically be looking for about 96.5 at that time. Pretty vocal about that. A lot of people are looking for 98, which I think could be a place to look for. I'm looking for 96, 96.5 specifically. However, if this puts in the higher low, like we talked about, and this all becomes consolidation, and you can see that you've got your 6M SFP. So we've not closed a 6-month candle above this local high at 105.78. And it has started to become very, very tested. So if this were to do something like this, this is obviously the target. And then when you look at this, what does that look like? You get the, however you want to look at it, whatever pattern you want to see there. But it would definitely look more bullish at that time. Doesn't have to be, but then we do have some unfilled quarterly business and 6-month business to kind of attend to up here. So that's how I would view that, right? So DXY, easy peasy. I know that we did pause rates with the old JPOW, but they are talking about maybe raising rates one more time to hit the terminal rate. So we'll see. If they do that, I think that could be the impetus to kind of fucking nuke the market, to be honest with you. But let's go over to the SPX. And I've got this as a weekly pattern. We put this out on September 28th, or I did anyway. September 28th on my Twitter, and also covered it on Debate Crypto. And I've covered it in the past several times on this channel. We've now hit this box formally. And you'll see a little bit of a pullback here, I think. And me personally, I am looking for a pullback here. If it were just to blast through this area, I would be shocked. But if it does, it does. You got a little bit of resistance at 45.48. But realistically, I'm almost borderline targeting 47 and a new all-time high, which is absolutely bonkers. To be quite upfront with you, let's look at the monthly. Yeah, you know what? The more I look at this, the more I think that it's going to go higher. Everybody's looking at the gold pocket, including me. And maybe that's a mistake. Maybe we're going to 45.40. We'll see. The reason I'm looking for a pullback either now or at some point in the future here is, well, I mean, look at this, but also shout out to T-Bone giving us the levels that I use. There's a little custom indicator for the group for us, so shout out there. But you've got a new quarterly average coming in at about 43.11, which is this Q3 high, which is really, really important to us, if you guys recall. Mainly because you don't want to come up above this level and then give it up, because then where are we going? Well, to me, I'm looking all the way back down to here personally, but you've got a target of about 43.11 or 43.25. This little zone right here would be your mean reversion going into next quarter. And then you've even got for the next 6 months, basically stating that price is going to find resistance and eventually come back to, these levels here, somewhere around the 4,200-ish, give or take. I would say 42 to 42.30 or 40. So a pullback is in the cards. And once you get to this 42.30, it's more of a pit stop level, in my opinion. Could continue up, of course, but I'd realistically be looking all the way back down to the Q1 low and the B leg, however you want to look at it. That's the same exact level across the board. That was the key level to get back above. And once we did hold this area as support, it, did its thing. So that's the analysis. If it continues to push up here, there is pretty close resistance right here. Okay, so keep that in mind. Somewhere around 45.93, and I think it was 45.50 if I recall. No, 45.90. Yeah, 45.40. Excuse me, 45.40 and 45.47. So yeah, 45.40. Which, to be fair, that's another 100 points. So that's why, is this the time to start looking for shorts? Absolutely. The problem is you have to wait for a reason to short. You can't just be like, well, we're coming into resistance, so I'm just going to start throwing in shorts, because price will do shit like this and go up past your target, and then it'll drop. And, you'll probably get stopped out, or, knowing most of the peanut gallery to get liquidated. So, you always have to have a reason to take a trade. So it's not just enough to do the analysis, but then you have to have an entry trigger, why you're taking the trade, so you can form that stop loss so that you're not getting burned on your trades. That's the hard part. Otherwise, you're just YOLOing and just assuming you're going to be correct. And, that Dunning-Kruger, that I'm smarter than everyone, opinion of yourself will get you absolutely burned in this market. So you have to kind of keep that in check and remember that there are rules to this game, because math does not care about your, financial well-being, so to speak. So do bear that in mind. That's all I've got for DXY and SPX. I hope that made sense. It's a really quick overview. We don't really trade a whole lot of them, mainly because lack of places to trade them. But, everybody wants the analysis on them, and I think it's useful. And it's also another thing that you can chart and pair up with. That way you can, practice your skills on other charts and see if maybe you're not a one-trick pony, right? Let's see. What do we have next on the docket? Max, anything to add before we go? Look at that.
What a mistake on my behalf. Really,
I saw that. Yeah. I told you if we get back above this, though, I would expect to see basically the weekly point of control, and that puts you right in line with the ideas we were just talking about.
Thought I was being sneaky, but the speed got me. Okay, so looking at it though, the open interest on the aggregated is it's doing okay.
I was gonna let you share your screen if you're gonna talk about it.
Yeah, so the open interest started off mid, but then as you got above the previous week low, which you mentioned, it started to build up again as you started to go green, and then it's just kind of gone fucking straight through the region. The issue you've got now is now you've SFP'd this region. If it makes its way back into it, you want to get above here and hold it. Where I didn't want to take a trade here is because there was a good chance that you bounced your head off it. The fact you haven't, you want to now hold above it, and you bounce your head off the top of it and not fall back into it, because then that's when you're probably going to come up to the weekly open, the untap, which is an untapped daily as well. So yeah, if you can live above here, potentially a nice little move. But the issue you've got with this now is the stop loss placement. If you are buying up here, it's not as neat as one would have liked. So yeah, it not really a trade from here. And now you get open interest drops. I think
it's about both sides.
Yeah, I think it's probably best to just sit out and wait for a cleaner trade.
The clean trade was the one you were planning on and you didn't take.
It was fucking too fast. It was far too fast.
Whatever you say.
Did you take it?
No, I was talking.
Exactly. I was talking.
I was talking. I was just muted.
Talking to yourself, loner.
Story of my life, man. Story of my life. Anyways, yeah, for me, I'm just looking at the current day high, which is
been taken.
25,743. Did we take it yet?
Yeah.
No, we're $12 away.
The previous day high, you mean?
No, the current day high of the session. The high we just made.
Just now.
You're fucking...
Mate, Magic, we've literally just made a high in the last 30 seconds.
No, we haven't.
How much are we betting?
I'm sharing my screen because you're...
How much are we betting?
How much are we betting?
What day is that?
Oh, that's fucking yesterday. God damn it.
Yeah,
I thought I was on like the fuck. I thought I was on like the 1 or the 5 minutes. Looked, I'm on the 15-minute. My bad. It is the absolute. Yeah. So we both dropped the ball here. I was like the previous day high, then yeah. So you are correct, because it puts us at a position to maybe crack into this, May low right here, and we'll see what happens. But realistically, this is the weekly range I've pulled up onto the chart we were just looking at. So if I get rid of it real quick, and we'll get rid of this just to have it, and go back to like the 4 hour so you can see what I'm talking about. So again, that was the level I said, well, we front ran it a little bit. That's why you had that box with the April pivot, right? And the volume ranges showing you what needs to get back in there. I believe it was the 60-day value area low. So a formal tap into this and taking of the previous day high, that's the SFP you want to look for if you're going to see one in this region. However, just looking at the volume range, the developing week, one would expect that if we're doing that, barring that SFP, we'd continue through the level a little bit to that like point of control. That's what you'd be looking for. And this is a low volume area, so I don't know why we haven't come up and just smashed into this yet, but we'll see. Let's look at KDA because I said we would. 45 minutes in, we got the KDA. Hot dog water. That's code name hot dog water. This video was made, man, I made this video back on like November. In November, I made this video right over here. Yeah, it was right here at this low because I was like, it's probably going to bounce and I'm not going to buy it because I don't care because it's going down to 42 and 34 cents. And this bounce was substantial. So anyone that took it, you know, there was a 79% bounce in here. You can make fun of me all you want because then it turned around and did, you know, one of these. And it's down 64% since then and well below the entry, right? So that's if you bought the top. If you didn't and you just held this position, you're like, oh, there's no way this guy's right. Now you're down 36% since I made the video. So still looking for this box on KDA. That's realistically it. This is a bad chart. There's a lot of people out there that are super hyped on this coin. They tell me about all the fundamentals. And you guys know how I feel about that. Strong fundamentals, real fundamentals are represented in charts. And this chart is horrific. So you've got an absolute killer weekly wick on the open here, meaning that the team just dumped on everybody. Massive run up, no new all-time high, and then nothing but a downtrend ever since. No signs of strength, not even a reversion back to the mean in Q3, the yearly, the 6 month. Fuck, even last year in the quarters. Good Lord. This thing doesn't even return to its quarterly averages at a rate of over 25% probably. It's pretty bad. So it's letting you know that this thing's being heavily sold into. There's really no interested money in this project. So if someone is really saying that this is like life-changing tech, they've probably read a paper or a brochure that was put out and some promises were made. And I doubt these are ever going to be fulfilled. And that's not to be rude. But even when it gets down to here and reaches my zone, I'm probably not going to buy it, even though I think it'll bounce pretty heavily. You know, if you've got money to throw away, sure, but I would not personally buy this. But because if it breaks this zone, then you're basically in a price discovery to zero. And that sounds fantastic. So that's the shit coin alert of the day is KDA for anyone that's wondering, and that's probably going to be an unpopular opinion, but I just don't care because we're not here to pander to the audience, right? Let's look at XRP next. 48 minutes, give or take, right? So about 48 in, we're going to look at XRP, and then we'll round it out and go about the Matic chart, right? So let's roll over to the old XRP chart, take a peek. Yeah, so XRP has done some really obvious and good things. I gave you guys the Twitter with the cliff notes for this one because I just get tired of seeing XRP engagement on Twitter. It's so stupid. Like, what are you guys going to do when XRP hits $1,000? You guys going to buy Lambos? Me too. Yeah. It's just absolutely bonkers. And yeah, no, this has been a very technical trade. Went ahead and put the receipts from 2021 showing I was looking for 29 cents. Had the magnet there for you guys. Even gave you guys a box if you wanted a box because who doesn't love boxes? But the target was 29.35 cents, and that is what we hit essentially. We hit 28.63. So that was the position of the year. I actually I don't think I quoted the tweet. There was another tweet after the one where I was showing the analysis from June 21. And then when it actually came down in 2022, I did show that I took the position and where I took profits at. I believe I started taking them around 49 cents. Basically looking for the Q1 low, right? That Q1 low right here was very key for Bitcoin, very key for the SPX, very key for a lot of altcoins. And it's come up and been no different. Now you have a new quarterly high, which is the Q3 high right here. Okay, so this level wouldn't have been here previously. It is now established, and you've come up and taken the Q3 high and swung fail. So you're still yet to close any time frame, daily or weekly or monthly, above the Q1 low at 54.61 cents. and now 55.91 cents, and your quarter two open is there. So yeah, not looking so hot for XRP. I am looking for this to come down to 37.65 and potentially 33.93. And if you lose the yearly open, I'm just going to say that this whole idea and trade setup for this bullish bat is likely going to get invalidated, meaning that we're going to lose this D leg, which was a perfect one-to-one. It was such a pretty thing. Technically, the bat's not invalidated because it can, as long as it doesn't go below X, which means that XRP would have to go below 10 cents. It's really bad. That I'd just be looking for these levels here, this little box, and, you know, that would be at 19.25 and 21.97. Some really bad things have to happen for that to get underway, and we'll see it coming on Bitcoin, but that would be like the doomsday level. However, I think the most actionable level for us is going to be after this swing fail, realistically looking back towards this little zone just from a horizontal standpoint. If we were to look at this from, before I do that, you guys notice I have an NPOC up here at 77 cents. This is your range for this section of price, and it's a 6-month naked point of control. And you can see on the 6-month chart here, we've come up and essentially found resistance at the low. So unless we actually flip these quarterly high at Q3 high, quarter one low, quarter two open, and now we have this major range right here. If you flip this, then yes, you're going to probably see 82 cents, 87 cents, maybe even $1.03. Do I think it's going to be super quick? Could be. XRP does tend to move very quickly when it does go up, and then it sells off over time. So, you know, it's kind of the history of the coin, to be honest with you. But explosive moves up, then just gets absolutely wrecked for ages on the way down. It's very painful to watch every XRP bull that had hopes of a new all-time high get them crushed that entire time, and then have to see it on Twitter and TikTok and YouTube, and you guys get it. If you guys want the cliff notes, go to my Twitter. I'll pull it up for you right now, and it's all here for you if you want it. Right? Go ahead and go to it, dislike or like it. I don't really care. But all the cliff notes, the levels that you need are there. That way you guys can go and spend time with your family, maybe see your children. Don't talk to them about XRP because we know it's going to happen and what we need. So that's, you know, that's that on that one. So let's go ahead and take a look at, like, if we had an overall range down here, you can see that we broke back below these levels May 9th. And would you just look at it? Just look at it. Let's actually do this. So you've given up your major weekly low here at 47.28 cents, which is in that post. And that if you lose this low and it doesn't get flipped back to support here, like it doesn't swing fail it, you'll be finding your way back into this range. And the target is 37.65 cents. Why is that? Well, it's the point of control of the range, and it's your next major local low in terms of support. I don't know where the gold pocket is, but it's coming in this region. Would you just have a gander? So one would say that I'm probably looking for something like this, right? This area of the chart to really be support. And I would just be looking to potentially swing fail this May low right here and say, basically, price is going to do this. This is what I want to see. Boop. And I want to see that. I don't want to see, you know, the opposite, where it comes down to the 2023 open, which isn't the end of the world, but realistically, then I'm looking probably down to here. Not what you want to see if you're an XRP fan, but you guys know the emails are coming out or whatever. I think if you forward the Hinman emails to like 10 people, it will, you know, help them win the case. That's a really old joke for anyone that had dial-up internet when those chain emails went around. Send this to 10 people, or other, you know, your mom will step on a crack and break her back type thing. But that's it for XRP. Those are the levels. You need to basically re-clear 54.61 cents. If that happens, I'm looking for it to do good things. However, the most actionable area on the chart coming up is going to be right around 37.65 cents for me. So I'm going to remain patient. If I was trading this one, I certainly would. Because you do have the makings of a double top that could run the entire range rotation again, which maybe is another opportunity. Maybe it just nukes it all the way down to 19 cents. Who knows? Matic, still short on Matic. If you guys follow me on Twitter, yet again, you know, I shared my last take profit on Matic. Where exactly was that? 52.69 cents. The low is 50.89. So I took profits at 52.69. That was 144% trade that I've been holding since price. Man, I took this trade on February 19th. So I've been holding it for a while. But take profit has been hit, and I'll continue to take profit all the way down to these levels here, ideally. Would like to think we're going to see these levels. We covered this in the last stream, so I don't want to get too far into it, but might as well. And we'll go ahead and just wrap XRP and Matic into the same tab. You had a really, really nice fund folder setup for anyone that has been following. This was also covered back in like September or October of last year, and then followed up on as we approach the targets. Really nice area to basically get short in on a bat. And first target on that is going to be the B leg, which was hit. And then now you're looking for the C leg to get taken. Why? Because the C leg is a 50% retracement in this case. It can be an 886, which if it's an 886, I generally will default to the gold pocket. But in this case, I'm defaulting to the C leg because why wouldn't we? And of course, there's your gold pocket, which is a nothing burger because we're expecting the C leg to get taken on the shortened impulse down, looking for the 886 and 818 because it lines up with that July NPOC. So technically filled out. And the next target, if you don't reclaim the C leg at 69 cents, so let's get rid of all this. We said that this was going to be the area to reclaim. You can see we kind of front ran my target a little bit here, hit 67.79. But, you know, if you get back above this box, we go box to box, right? That's how we do it here. But until then, if you lose 52 cents, I'm realistically looking to basically run the entire pattern, take out the original starting point of the pattern coming all the way down to 31.6 cents. And then I'm looking to be a buyer below 31.6 down to 22.44. Or if you wanted to be super conservative, because this could just completely nuke out, what do they call that? Stroking out, I believe is what they'll call it. And the next target on this would be, oh, I didn't want the 0.133. I wanted this one. Yeah, because next fib targets based on this projection would be 1.133 in negative numbers. So let's actually do something different with this one. Just real quick, if we're going to use fib targets along with our current targets, because I like this box quite a bit. It also gives you the opportunity to come down here and swing fail these lows, right? And then reclaim them. And then you could even take the safer along and still get a great entry. But since we're all about technical so that we can collect clout later, let's do the technical thing. We'll do the trend instead of what we were doing earlier. And there you go. There's your 1-to-1. Okay, so if you guys recall, that was also the 1.133, which is your next fib target. So realistically, if this box is not, exact support, I would still expect there to be support just beneath it around 13.41 and 15 cents. So big zone. But again, to the DCA guys and girls, they don't care. They're like, oh, this is so cheap. I have infinite money. I'm always buying positions. We all know who those guys are on Twitter. Absolute mooks. But if you were being conservative, if it came through this box and did something like this, you're buying the reclaim of the box. You've seen a sign of strength, and now you're long on this shit all the way back up, probably to this C leg at 69 cents. You get to do 100% trade, maybe more. So that's how I would view Matic for the next long situation. I'm either waiting for a sign of strength here, or I'm going to continue to hold shorts until I reach this box and take another profit and probably close that whole position, to be honest with you. So I doubt I'm going to be shorting it down to this NPOC at 3 cents. And that's it. I think we covered ADA last time in depth, so we'll cover Matic this time, and that's it. That's a wrap. I got nothing else. I can see Max on his phone over there, so he's not paying any fucking attention. Fantastic, as always. He's always like, when are you going to teach harmonics, bro? I'm like, I cover them all the time. I just see you on Instagram over there. I get your messages, Max.
Oh, well.
Busted.
We trade differently, mate. Harmonics don't mean to me.
You should learn to swing trade more.
Yeah, I should learn to not put stop losses in shitty positions.
You should always put it below the support, not above it.
I thought I was being,
It's like, what?
I thought I was being smart.
It's so funny though. Yeah. Did
Honestly,
we take the
it's
previous day
fine.
high? We never did. You left that previous day high. How about that? Cunt. Anyways, now that we've dropped the C word in America, do you have anything that you want to throw up before we go? This is usually your cue. This is like your favorite thing to do. Mac's going to put up a QR code for us, unless he's going to add to the analysis, which he might.
Go on. I was just going to say that, we're back in the range. So, we're not living above where we can say comfortably that, there's positions trapped, even though that wrecks so many people. This move's taken out of a lot. So, for me, I'm going to say the same. If you live above here, now arguably you've got a better place for a stop loss, because if you just blasted through here and entered on the breakout, where the hell are you going to put your stop loss? Though this was extremely fast and arguably, I would argue impossible to really get into, because if it was 15, go to 15 seconds, within 30 seconds you were at the low, so you couldn't have traded the breakout here. But this one here was really nice. If for some reason you had like insane reflexes and could enter immediately on the break and put your stop loss here, that was a good stop loss. Whereas on this side, didn't have it. What you're doing now is you're building up positions again that we can then, look to either get in when it comes into the middle of the range, even though I wouldn't like that personally, or it's building up the positions to make it a better SFP from the high, to be honest with you, because obviously when you're getting increase in open interest, it's not just longs, it's both of them combined. So if we get up here, have a decrease in open interest and find your way back into, below the high, it's a trade. It's a short trade, but very easily could come up to the weekly open. But whichever way you want to trade it, it's now giving you very nice stop losses to the low side and to the high side. But yeah, personally, right now, I don't really see any edge other than the SFP of the high. So I'm going to sit out and wait. Made my mistake. Might as well be patient. But yes, we are doing a free 7-day trial for our group. I don't know whether you already mentioned that, Magic. But yeah, we are. QR code. Is he going to come up?
There it is. It was there for a second. There you go. It's
Oh,
up there in the upper left corner.
I'll do this one here. Bullish.
There you go. Boom. Anyways, if you guys haven't hit the like already, please do subscribe. We go pretty in depth here, both in order flow and charting techniques, everything from just how to establish ranges, how to use harmonics, and how you should be looking at the charts and establishing ideas. So a lot of benefit to the channel, I think. And what do we do? 2 of these a week right now, Mondays and Fridays. So if you guys got 2 hours a week to learn, this is a pretty solid, free public live stream. But if you want to check out the behind the scenes stuff and get like the course material and get access to our 2 weekly lives, plus I believe we randomly build charts on altcoins and shitcoins so that you can see from start to finish how the whole process works and forming a plan. That's all there. Plus you'll be in the Discord and you can chat shit with everyone and share your charts and learn a little bit faster. That's usually the fastest way to do it, is have a community. So and by community, I don't mean cult. So don't get those two things, mixed up. This isn't a place where we want to be worshipped or anything. We just want people to come in, apply themselves, and make good decisions so that I don't have to read a terrible Twitter post all day long.
2 friends that asked me the question. So I've got 2 that you could potentially use. One is called Level Alert. It's by Pippy D in the group. So just drop him a message and he'll open it up, because it's pretty much got like all of the levels that we use in the group type thing. You've got like the Bay EMA in here. You've got loads. It's really good. I like it a lot, and that's my preferred one. But if you don't want to use that one, or are afraid to reach out and message Pippy D in the group, key levels from Spaceman is, it's rather similar. It just hasn't got like it's not got as much customization as Pippy D's has. So yeah, I much prefer Pippy D's. I actually don't really use Spacemans at all, because the way that this one just lines everything up is just much cleaner. And you can customize it exactly how you want it. So yeah, but you have to message him in the groups for him to give you access. But yeah, it's Level Alerts or Key Levels by Spaceman. That's a pretty well-known one, to be honest with you. The Key Levels one is. But yeah, that's it, friends.
All right, good stuff. that awkward pause. Okay, guys, it's Friday. Do yourself a favor. Don't spend all weekend looking at the charts unless that's really what you want to do. Spend time with friends and family. Go outside, get some sun. Just like Max over there. See how tan he is over in Dubai.
Yes, so tanned.
I'm going to spend the rest of the morning watching this likely try to take a move up here and see if I can't catch a trade when it does. And if I don't, I'm going to go mow the lawn and walk my dog. So everybody have a good weekend. And if you're in the group, we'll see you in there. If you're not, maybe we see you.